Hello and good morning, everyone. Welcome to today's market updates. My name is Edmund. So today the US will be observing a holiday. They will be celebrating Thanksgiving Day, and for tomorrow, financial markets are have shortened trading hours. So expect today's market to be extremely quiet, and for tomorrow, maybe we may have one or two medium cycle moves. Okay. So for today, we just have some minor data coming out from the Eurozone. We have German consumer climate at 3 p.m. and we have the M3 money supply data at 5 p.m. The ECB, European Central Bank, monetary policy meeting accounts will be released at 8:30 p.m. So we're going to jump straight into the economic calendar, which was released yesterday on a Wednesday evening. Most of the economic events which was scheduled to be released on a Thursday was pushed back by one day, and it was released on a Wednesday evening. Okay, so let us have a look and see what were the results. So first of all, unemployment claims data, which was usually on a Thursday evening, was released on a Wednesday evening, and it came in at 778,000 US citizens seeking for unemployment claims. So this was the second consecutive week that unemployment claims has jumped up. Last week, the numbers came in at 748K, and for yesterday night, the numbers came in at 778K. Okay, Marcus was expecting 732K only. So this means that it looks like the jobless rate in the US could be creeping up, and we could see the next non-farm payrolls data in the month of December to be not as robust as the months before. Okay, so preliminary GDP quarterly came in within market expectations of 33.1%. Core durable goods orders came in above market expectations. New home sales, again, the housing market in the US for the last 6 months has been outperforming, where almost every single new home sales or building starts report showed better than expected data compared to market forecasts. This is mostly due to the low interest rate environment in the US, where it is cheaper for home buyers to purchase a house. Okay, so personal income surprisingly came in at negative 0.7%, way below market expectations of neutral reading. Okay, and of course, personal spending increased to 0.5% from market expectations of 0.4%. More importantly, crude oil inventories. Yesterday, markets was expecting inventory data of just 100,000 barrels of oil. The numbers came in at the inventories reduced by 800,000 barrels. So this was definitely another positive bullish point for crude oil prices. Okay, so in terms of crude oil prices, we do see the crude oil prices moving up for the last, I would say, 2 weeks now. Okay, for the last 2 weeks now, ever since the prices of $40.37 on the 13th of November. Okay, so yesterday, with the bullish note of the crude oil prices, coupled with the reduction in crude oil inventories. Crude oil prices, in this case, the US West Texas Intermediate spot price touched a high of $46.23. And of course, crude oil prices has also been driven by positive COVID-19 developments. Again, um, once vaccines can be developed and distributed, demand for travel and also demand for energy such as crude oil will also increase over the coming months, especially well into next year. Okay, so those are the events for crude oil. And of course, coming back to the unemployment claims data, numbers coming in worse than expected. So theoretically, the US dollar should be weakening. In this case, yes, it did weaken. It did weaken, and the weakening of the US dollar actually began as early as 14 plus 6. This is at 8 p.m. local Malaysia time. It weakened from 92.22 all the way to the current lows of 91.90. Okay. So US dollar index has been weakening since a Monday, Tuesday, and also a Wednesday. Okay, so yeah, it should try to find some support already at these levels. But again, remember, US is out of the picture today as they are celebrating a holiday. So again, we could expect the prices of the US dollar index to just hover around 91.90 levels, and the next support levels, if it does push down for any reason, will be at 91.70 levels. Okay. So with the US dollar being weak from about 8 p.m. onwards, and before that it was actually bullish, okay, bullish and then bearish, okay. So when we look at the UK pound, it will show the opposite behavior where the dollar was strengthening and then weakening. For the UK pound, it was weakening about 64 pips, and then after during the US sessions, it strengthened back about 90 pips. Okay, so pretty similar story for the euro dollar, weakening about 46 pips and then strengthening later during the US market sessions. Gold prices was pretty much muted yesterday. Didn't really move much. It traded within a tight range of 1803 US dollars to a high of 1817, about it was about a 14 US dollar range. So yeah, pretty quiet for the gold prices yesterday. Okay. So you probably wait and see on Friday, maybe there'll be some minor movement, but the gold prices should only be moving by next week. Okay. So yeah, so that is the sentiment of the US dollar, the movements on the UK pound, euro dollar, and also gold prices, and not to forget oil prices also. S&P 500 and also the Dow Jones, with today's Thanksgiving and also tomorrow's short-term trading hours, we can see that yeah, it was mostly a pullback from the historical highs. For the Dow Jones, it touched a high of about 30,214 points and close at about these levels at about 29,891 points. So similar pattern goes for the S&P 500, from a high of 3,655. It closed at about 3,630 points. Okay. So again, today's economic calendar is pretty quiet. FOMC meeting minutes, there was no major announcement or comments from there. So today's economic calendar is pretty quiet. And moving to Friday, it is also relatively minor economic data. Okay. So, yep, and as you can see on the prices currently, the price action, the volumes are pretty non-existent, although it's just crawling. So you guys can possibly have a rest today and maybe even tomorrow. Come back again on a Monday next week. Okay. So have a good trading day ahead if you are trading. If not, just take a rest, and I'll see you again for the next market updates. Thank you and have a good rest. Thank you.